The banking index is one of the most profitable index in the stock market currently, and all investors are rushing towards it. Now, what if I tell you there is another index people are not taking too serious, but they have the same strong potentials and strong fundamentals to have a very great rally, and that is the insurance index. Today on Clockwise, we'll be discussing 5 insurance stocks with the best of fundamentals that are ready to take up and can make millionaires in the coming weeks. And this is Clockwise, where we tell you every information before the rally. My name is Providence, and like I always do it, my guest is here, and he has proven himself over time that he sleeps on the charts, he sleeps on the fundamentals, and he tells us what these businesses are doing. Now, with a resounding virtual round of applause, welcome my guest, Mr. Kandem. Welcome to Clockwise.
Thank you very much for having me once again.
I know you're very happy. If you were in charge, I would have told you that the dry bones are risen again. I know you're very happy. And today we'll talk about the insurance stocks. Now, but before we go there, I want to give you your time. I want to give you your time to actually enjoy yourself. Because I knew on this same show, I called the particular stocks a penny stock. And you were angry and said you're going to prove a point to me. And what you said actually come to pass. When I was looking at you, I could not call you yesterday. When I was seeing the move, I said, yeah, okay. Now, let me give you your time. You made some calls on this show some few weeks ago. And I'd like you to actually recall those calls. Let's see if they actually did what you said they would do.
Okay, so thank you very much. I'm happy that you said that you called it a penny stock.
Yeah.
So July 1st, we did a video, and the title of that video was "These are the best stocks to buy now." And in one of the names I mentioned was Access Core. Remember when I mentioned that name, you described it as a penny stock.
They were on the ground already.
You described it as a penny stock. Access was trading that very day at, I think, between 21.5 and 21.9. And then I screamed a buy. I was here saying buy the by the way, this is not supposed to be an investment advice, but I made that strong recommendation. I said buy Access, and I gave my reasons for buying Access. I remember that was 1st of July, and 9th of July was when the whole course debacle, the regulatory overhang on whole course was to be settled by the CBN. And then I mentioned that even with that, which I believed was already priced in, I told you that Access is going to do well. Currently it's trading at 31.5 naira, 31 naira 50 kobo. That's a 43.84% return in 3 weeks.
From then.
3 weeks.
Yeah.
For a penny stock,
I could remember,
a stock that you said was penny stock on this show.
I could remember the last time, after that particular video, we did another show where you mentioned Access. And you said that Access is the only stock that has not gone down. And I told that they were already on the ground. They were already on the ground.
You tried to ridicule the calls that we made. The fundamentals were strong. I looked at it as a very massive dislocation. Access was trading at 1.6 times earnings. That is literally, you are buying $1 of Access, $1 of Access earnings for one naira 60 kobo. That was insanely undervalued. In fact, I call it criminally undervalued.
Yeah,
that was what Access was, but I mean, it's recovered. And it's recovered and it's pitching. I told you it's going to take out that all-time high, and you said no, it's not going to happen. Okay, we're going to watch it.
I knew it was going to, but it was going to take out. But it was a time.
Penny stocks.
Yeah, the time from a penny stocks to a main stock.
I mean, now I believe you are crying that you did not buy. I remember telling you that I'm buying at. I literally bought at the bottom, which was 21 naira 50 kobo. And you were ridiculing me for buying a penny stock at that low. It turned out that was the low for that retracement. So that's not the only one.
Fundamentals were strong.
That's not the only one. First whole call, 22nd of June, I made that call. In fact, the video was don't buy bank stocks before watching this. You also was in the same laughing chair. And it was trading at 58 naira. And I told you that it's a buy for me. And I saw the skepticism that you put on your face. I'm happy that now it's trading at 128 naira.
Yeah.
That's a 120.69% return in just 1 month. Think about that. Just 1 month.
If you place,
So the next time I make a call on this show, please allow the audience to be the one to decide, not you. Please.
if you place both First Holdco and Access Core, I had confidence in First Holdco more. But Access Core was at a point where I felt that
Listen, First Holdco, just so you know, First Holdco has actually announced its results. Yeah, and it's done 120%.
Yeah.
Access Core has not announced its results yet. It's about 43.84.
Yeah.
Do you understand? And Access Core, by the way, do you know why I told you that? And by the way, you have to agree to this. First Holdco and Access Core had impairment charges.
That was the problem.
Good. And I told you that I knew why these two names were down. It was because of the impairment charges and the fact that they were not paying dividends. At the time that during that
a dividend community, dividends economy.
You are a dividend guy.
Everybody had to deal with
You are a dividend guy. So I told you that I know why these stocks were beaten down. I know why First Holdco was beaten down. It was because the result, the impairment charge prevented them for announcing dividend payments. But I told you that things would change remarkably. So because you cannot ignore these names. This guy, by the way, First Holdco is sitting the profit before tax grew up to over 600 billion naira. These are when you look at the fundamentals, and then you realize that between the time it was at this price point and this point, nothing has changed. By the way, First Holdco is still trading even at 120 naira per share. It's still trading at less than 5 times earnings.
Undervalued.
So it is still, if you look at it, it's like it is less than 5 times earnings. Access Bank, even at this point, is less than 2 times earnings.
So there are still opportunities.
So there is still a massive opportunity on these names. So First Holdco has delivered. I mean, that the investment I made at, as a matter of fact, I even bought at lower than that. I bought at 53 really. So I should be, that investment has netted about 120, I think 130. 30% already in just 1 month or even less. Then my investment in Access has done, I think he has done over 40%, and all that. So that for me is a very
I give it to you.
Very good. So the next time, please, don't call any stock.
We've said it on this show that you sleep on the charts. You always sleeping on the charts.
But you don't acknowledge the fact that I sleep on it.
I do. All right, now these are banking stocks.
Okay,
and they've done incredibly well. Right from last year, we're seeing so much. People say because of the policies, the government policies, the recapitalization and all that is making the institution very strong.
Yes.
And we are seeing very great profits. But there's another particular area that people are not looking at, which is the insurance stocks. We are about to see same policies apply to the insurance sector. Are we going to see this kind of movement in the insurance stock?
In the last podcast we had, I told you something. I said, you have to look at trends. A lot of people are rushing into bank stocks now because they've seen the appreciation. But there is something that is behind this. For the insurance sector, there is an ongoing industry recapitalization for insurance stocks. You've seen some of them that have done public offers, have done rights issues and all of that. The reason is because the threshold is 15 billion naira.
Okay.
So the insurance, this is like the World Cup paid off capital, which you need to have that. So that in itself is always something that the CBN does to ensure that if anything happens, you have something you can dip your hands into.
Yeah.
Now for the banks, you saw the figure for commercial banks, 500 billion. Now the 500 billion. So whenever there's recapitalization in a particular sector, it brings confidence, investor confidence.
Yeah.
I told you for the banks that investors know that if a bank goes under, the people that are going to be somehow indemnified would be the depositors.
Okay.
Investors, nobody has business with you. The regulatory agents don't have any business with you. So investors would rather go to the bank with the lowest likelihood of going under. And this for recapitalized banks. I mean, if you have 500 billion in paid up capital, that means
You're a strong bank.
You're a strong bank.
Yeah, strong bank.
So that's what it's. So in the insurance space, in investors, the confidence of investors will be heightened once these banks have consolidated. You know, so the recapitalization of these banks,
Of these
insurance companies, will lead to some. I know some names that are they're already worth. You know, they don't have any problem with recapitalization. But some names that are still not very strong in terms of their balance sheet would have to really come together, merge, or you know, to be able to come up with that that paid capital. Okay. So there are four things that make insurance sector to be very lucrative, you know, in the long term. Number one, industry recapitalization.
Okay.
Number two, the interest rate environment. I told you the last time I said that interest rates are net positive. Interest rate hike or a high interest rate environment is net positive for insurance stocks because most of these insurance companies, they collect premium, but they don't pay out you know, claims immediately. So if you are sitting on a huge capital in terms of premiums, then you can actually deploy that into the fixed income market and earn a decent return. So because we are still in a high interest rate environment, we've seen that Brent has actually crossed $90 now. It's back above $90, which means that the CBN will still be sitting on their hands in terms of cutting rates. Higher interest rate environments means higher prospects for insurance companies. Then the next one is insurance penetration is getting bigger and bigger. You know, the two things. Number one, life insurance. You have an emergence of a class of people that understand that insurance, life insurance, is very important to the business. For them, because in the event that anything happens, I mean, you don't want to just sit just like that. Businesses are emerging. Some businesses are growing, and of course, you need business insurance. People are understanding car insurance, things like property insurance and all of that. You've seen the property market has exploded in Nigeria. So alongside the property market comes insurance for these properties, especially for institutional players. Then you have, of course, economic growth has continued to expand. So these are the opportunities that are available for insurance
companies to have.
But for the biggest, as far as I'm concerned, is the high interest rate environment that we're operating in.
Okay, they'll profit them.
They'll profit them because they're not really doing anything with this capital.
Okay.
You know?
Now, there's something that came out recently, or was it yesterday, about Dangote Refinery IPO. Now, they brought a publication that they've actually been able to raise $2.5 billion in private equity. Now, we cannot take that away that Dangote Refinery listing will actually affect the entire NGX.
Yes,
will affect the NGX. Now, I want to see the place of insurance companies. As this event unfolds.
Okay, so there is something that a lot of people, especially retail investors, don't understand. But at an institutional level, you understand that institutional investors don't just invest. For me and you, retail guys, if you want to invest, we just go on a Bamboo app and then investment app and place a buy. No, investors don't do that way. Investors look at risk and then they get an insurance cover for that investment that they were about to make. So if as Dangote Refinery is going to list, they have already, like you said, in private placement, they have already gotten 2.5 billion, but we believe they will still get more. So if Dangote comes in, that's about 50 billion into the NGX. Now, watch this. There are some markets that institutional investors cannot go into. And the reason is because of the size of the market. So the Dangote coming in means that institutional investors will begin to look at the Nigerian market. Remember, on the heels of this, it would be the listing or the readmission of Nigeria. We believe so because, I mean, ACC has been working around the clock to ensure that this T+1, the overhang over this T+1 in terms of the challenges that international investors have are being worked on. Now, so you have S&P Global taking Nigeria from B- to B+, one. Number two, and literally putting Nigeria on their watch list. That's number one. Number two, you have FTSE Russell and readmitting Nigeria into the frontier market index, and this will be happening at the same time that Dangote will be listing. You know what that means? It means that a lot of a lot of institutional investors around the world will now begin to take a look at Nigerian markets. That's number two. There are ETFs that track, markets that are on the frontier market index of FTSE Russell. They will be compelled to buy into the Nigerian market because that's how indices works. That's how ETFs work.
Yeah.
If you are tracking a particular market, you must buy the components of So what does that tell you? And by the way, before these guys invest, they must take out an insurance premium. Otherwise, you think an institutional investor will sit down and then tomorrow you tell him that their investment has gone to zero. It doesn't work that way. They actually get an insurance cover, and that provides an opportunity for Nigerian players that are into investment insurance, because there are global insurance firms, but most of these firms like to work with local
insurance firms.
Because they understand the terrain, and all of that. So it's an opportunity, a very huge opportunity for the Nigerian insurance
all right,
players.
Now, let's go to the conversation for today. I know you've done your analysis. Yes, you always do. I've done mine also. Now let's see. Are there insurance companies that are very, very, should I say they are very lucrative now? They may not be lucrative now, but they're undervalued. Because we've always said, okay, the best time to buy a business or to buy a stock is when the business is very strong and the price is very low, maybe undervalued, not just low, but undervalued compared to the strength and the fundamentals of these businesses. Now, are there insurance companies that are at this stage that people can actually invest in?
Yes.
Okay.
Yes, so there are insurance companies that people can invest in. As a matter of fact, I just bought one of them this morning. I bought two of them this morning. I'm going to buy more. So there's the guy there's one that we call, and I'm going to start with it. There's one we could call the Lord when it comes to the insurance space, because they have provided very sterling performance, and that is Custodian Investment PLC. It's chaired by a lady I love so much, Mobalande Johnson. Do you remember her?
Okay.
She was there. I mean, she's a sterling personality. I'm not saying I'm picking this because of Mobalande Johnson, but I'm saying she's someone that, if you look at her track record, she's been one of the best. She has it. And that there's a Custodian Investment. Custodian Investment is, I have a good position there. What Custodian Investment is, when it comes to life insurance, it's very diversified. There's something around insurance. Diversification within the insurance space is very important. There's an insurance company should be diversified in terms of the underwriting it does. Because if you look at it, life insurance, property insurance, different things that you have to be part of. Investments, trusteeship, all of this ensure, and that's what Custodian does. It ensures that if one sector falls, the other sector thrives, and then helps you to balance. So when you are if let's say general insurance is down today, tomorrow, but life insurance is up, or maybe life insurance, it's because of lack of understanding. You are doing life insurance, but you're also doing investment. You're also doing property insurance. That allows, that diversification means that you remain robust, strong, and resilient. So that is one of the things that Custodian does, and Custodian has already made it's worth over almost 400 billion.
So it has made the capitalization.
So I don't think
they has to settle.
And this is the advantage of investing in a name that has actually met the recapitalization target, because the chance of a dilution is not there. It's little. It's slim. If you go into a name that is not yet recapitalized, that has not raised the minimum capital required, that means there is a prospect that they could actually do a public offer.
They can even merge.
And if they do a public offer, let's even start from a public offer. Public offer means that if you don't participate in that public offer, you are going to be diluted. And there's a chance that some of the people that are buying into this public offer are going to to dump. Let me give you a very clear name: International Energy Insurance. I remember one of our audience, one of the people here actually talked about that name. But I sounded a note of caution. One of our viewers mentioned that name. They were doing a public offer. to be able to raise the 15 billion, capital. I sounded a note of caution. I said, remember, and by the way, for some reason, the name was just printing 10% literally almost every day. It went as high as 9 naira.
That's why I asked that question.
And then 9 naira, while the public offer was at 3.2, 3 naira, 20 kobo. Now, remember, these guys were minting, I think, about 5 billion shares for about 17, I don't know, I think 17 point something billion naira at 3.2 naira per share. Now, my point was, look at their existing outstanding shares and look at what they are bringing in. It was more than 100%. I think it was more than 100% dilution. It was like twice, if not, it was almost at par, or if not more than the existing shares. And I said, if you bring in these shares into the market, the kind of dilution it will cause will be such that it might even trade, the market might even trade temporarily or even permanent or for some time, trade below the offer price. As I speak with you, that name is trading at 4 naira. From that 9, it is down to 4 naira 40 kobo per share. And
so people came to dump.
No, it's not even that. I think that is pricing because the shares will be released on the 27th of July, which is next Monday. Good. 27th of July. At this point, it's already, people have not even received their shares. So those new public offer, the shares they bought at the public offer, and then it's already at 4 naira 40 kobo. What do you think will happen when those shares hit in people's CSCS accounts? Do you understand? So that's what I'm saying. Go for companies, when you're looking at the insurance space, go for companies that have probably already
recapitalized.
Yes. So that's why Custodian for me is a good name. Custodian is, like I told you, sitting at over almost, I think 387 billion naira or thereabout. It might change by the time you're watching this video. So Custodian Investment for me is a name that you should be looking at. Then the other name, by the way, the name is name. Name insurance. I like name insurance because when it comes to underwriting discipline, because let me tell you something, a company is an insurance. When it comes to an insurance play, one of the things you must be very good at for you to be a good name is your underwriting discipline. You don't just underwrite any risky investment. You must be do your numbers and be sure that this investment will not lead to a catastrophe. Let me give you an example. When we're talking about the Strait of Hormuz, ships were actually were unable to pass. And I told you, it's not because there's a physical blockade. It's because the insurance companies are not willing to insure
the passage.
a ship to pass because the risk is too high. So that's how you look at risk. That is how you weigh risk. So an insurance company should be able to weigh and underwrite risks that are, let me use the word, reasonable. Yes, and I think name is one of those strong non-life insurance players that is very good, very good in underwriting, that has that underwriting discipline. So at this point, I think it's still good. I think it traded up to, recently it was over 36. I think it is back now to, it was down to 25, but it's back now to 31. So name is also that name, and because there's that it's a name that when you talk about profitability, when you talk about they are sitting on so much, much like Custodian, they're sitting on so much, and when they're sitting on so much capital in terms of premiums that are coming in, that enables them to take advantage of the high interest rate environment, so they can invest in some of these names, and because of their underwriting discipline, the chance of let me use the word reckless claims, meaning, they are not liable to so much claims. One of the challenges when you underwrite just about anything, your claims might even be more than the premiums you're getting. So because they have that capital they are sitting on, they can take advantage of the high interest rate environment that we are currently in. So that is why name for me is a strong play. And shareholders like you that are looking for those small.
No, it's not small. The dividend is a proof. It's a proof.
What is the place of return on equity?
But dividend is the proof.
What is the place of return on equity?
It is still the proof.
No, let me. I mean, I just gave you an example. I just did 120% on face Hulku.
Yeah.
How many years do you think it would take me to be able to get dividends to that extent?
Yeah, but it depends. It depends on
So that's why you see me. I'm a value investor. I lean more towards growth than dividend. I told you over and over again that if I want money, I can actually borrow from the market. So then you have, of course, ICO Insurance. ICO Insurance is a name that is very. I mean, a lot of people talk about it. ICO Insurance is very sturdy. But the only thing is that, and I think it's a good buy. Let me tell you why. ICO Insurance has been consolidating around 4 naira for a very long time now. So I believe that if you look at the price action, you realize that before it got to this 4 naira, it was considered around 2 naira. Now, I believe that, and by the way, if you do technical analysis, you know that the more a stock consolidates, when it rips off, remember, those are orders being gathered. When it rips off,
it moves.
It will move very, very seriously. So that's why I think ICO Insurance at this point still within that consideration. So it's a place that you might want to buy.
Okay, that's 3.
Good. Then you also have another name, Azamanzad. You know, Aza is the parent company, Azamanzad. Azamanzad is, I mean, they enjoy that global. Most companies, if you look at most companies, when they have a global lead, or they are part of a subsidiary of a global company, they have access to a lot of. There is that investor confidence. They have access to capital. They have access to a lot of advantages that the local guys don't have. So Azamanzad for me is one of those people that have, that would likely benefit from that that exposure. And then of course with that comes excellent corporate governance, comes a lot of underwriting discipline, because I mean the standard has to align with their global partners. And so Azamanzad is also a name that you could be looking at. Then of course you cannot talk about this insurance place without talking about Cornerstone. Yeah, you can't.
Cornerstone. You can't mention insurance, 5 insurance, I'm mentioning Cornerstone.
Cornerstone is also a name. I remember I bought it. I think there was a time we were talking about insurance stock. I bought it, and
we should review that video about insurance stocks.
We'll review that video. We actually had met insurance stock. So for me, Cornerstone has a very healthy capital position. I've told you that the insurance companies that stand to benefit from the high interest rate environment that we are those that have high capital position, because they can deploy that capital. You cannot just sit on just the premiums that you get. No, you get these premiums and then you deploy it, you invest it, and then you pay. So when you combine underwriting discipline and high capital position, that means underwriting discipline means that you don't have so much claims to pay out. Then high capital means that you have resources to invest in the fixed income market to take advantage of the high interest rate environment and make that margin, expand your margin. So I think Cornerstone is one name that I think would benefit from this.
That's 5. Now, quickly before we go, I'd like you to allocate your resources to them. Like you have let's say 1 million naira, for instance. Now, how will you allocate 1 million naira to each of them?
I would allocate, of course, 30% will go to custodian.
That's 300,000.
300,000 is gone. I have 700,000. I'll put 20% across other names except Cornerstone that will get 10%.
Okay, that's one.
I already have Cornerstone, so I will just put 10%.
Okay.
I will put 20% for ICO, because I believe that after this consolidation, it will
move.
For name, I'll put 20%. I could do then for Azamanzad. I'm doing 20% because of that global partnership means they have access to a lot of capital that they could to take advantage of the. And by the way, that I think it's been up about since for the past 2 days, it's been up over 11%.
Okay.
So I'm already up 11% on the recent investment.
The last one will take 10%.
The last one will take 10%. Yes.
All right, no problem. We'll come back again to review this video. I give it to you again. Thank you for coming. Thank you for coming.
I know that insurance play is a long-term thing for me, but I know that some of these names will make that
They'll compete to the bank.
they will do very well, because remember, insurance penetration in Nigeria is still very low, extremely low. So what that means is that as more people get aware of the need for insurance, as more companies build, as more investment come into Nigeria, then the insurance sector will.
All right, that's a very nice place to leave today's show. Thank you for coming, and we'll do this again. All right, on that note, we'll come to the end of today's episode of Clockwise. Do not forget to like, subscribe, and also put on the notification bell on this channel. Now, if you want to join our group, our Telegram community, you can actually go to our profile. You see a link there that lead you straight to our community, where we have close conversation. But if you cannot go through that link, you can just go to Telegram, type Clockwise podcast, and you can actually get yourself access into our public group. From there, you can actually share the group. Thank you. Please do not forget to share this video, and do not forget also that there is always a bull market everywhere, and we are here to help you find it. See you again.